Good evening, everybody. This video is for somebody if you are, starting to adapt order flow in your trading and analysis, or you're already using order flow or just getting used to it, or you are having different trading methods and styles which you're already using, and then want to add order flow as a, all analysis as well into your trading strategies. This video is for you. One of the most common questions, generally two questions I get is, I'm getting started with order flow. I've taken Go charting. Now, what to do in terms of how do I sort of use the order flow analysis? Bid ask seems very complicated to me. That is one thing. Second thing is I'm already analyzing the market using my methods, maybe pivot points, Fibonacci, Elliott waves, moving average crossover, super trend. I have a trading system in place. I'm using a trading strategy already. And how do I use a order flow effectively to improve my trading as well? Okay, or add to my trading strategy rather than complement it. So that's sort of a thing. Then we'll try to address that. So by the end of this video, you'll have two or three very solid methods of doing that using order flow analysis. Okay. Okay, so for that, what we're doing is we are breaking the entire trading into two parts. Okay, trade decision and trade management. Trade decision is using your existing methods of market analysis to decide your long and short bias in the market. Okay, so generally people use something like a super trend to, so if super trend is long, I'm long. If super trend is short, I'm short. That is trade decision. Maybe pivot points. Okay, maybe Elliott waves, maybe moving average crossover systems, okay, or sometimes even indicator based systems like RSI is more than 30, I want to long the market, RSI less than 30, I want to short the market, less than 70, I want to short the market. So these are the things. So what I'm saying here, and listen to me carefully, what I'm saying here is for trade decision, continue to use your existing system. Okay, don't immediately try to shift everything to order flow. Order flow trading is a different genre of trading where a lot of scalping and other methodologies are involved. Okay, that's a different sort of trade. So don't try to just jump into that right away and switch everything. So trade decision, continue to use your existing trading methodologies, existing analysis method. Trade management is where we'll start using order flow analysis and effectively improve your trade management. So what is trade management? Trade management is managing your trading positions and exits, entry timing, exit timing, partial stop losses, aggressive stop losses, re-entry, target booking or finding a larger target and things like that. Okay. So in general, what I've seen is, if you have a system with an 80% good signal, okay, let's say a trading signal system, but bad trade management, okay, the outcome is not great. Compared to that, let's say I have a system which is just 40% good trading signal, but very solid trade management, okay, very good and solid trade management. I think this system can end up doing way better than this system, okay. The reason is good trade management over a period of time can really help improve your trading outcome. So if you are, let's say, if you're long trade and if you're short trade, one was a 50-point profit, another was a 50-point loss on Nifty. But if your trade management said that, okay, exit the short at or 25 point, or take one lot on that short trade but two lot on the long trade, so eventually made money with a better trade management, though the signal was 50-50 at the end of it, right? You did not wait for it. Okay, so trade management can effectively improve your trading outcome of your trade decision. So trade decision, continue to use existing system. Trade management, continue to use, you start using adapting order flow for it. Okay. Now, what is trade management constituting of? So for me, trade management is five, six simple things. Okay, I have listed five here. So one is position sizing. Position sizing is typically how many lots do I trade per based on the signal confidence level and things like that. So do I do one? So for example, if I'm a two-lot trader or multiple of two-lot trader, do I do two-lot for every trade? Do I assess every trade based on certain other parameter and say, okay, I do one lot here and two lot there? That is trade, position sizing. Risk management is how much am I risking per trade? Simple, do I risk 2%, 5%, 1%, whatever, depending on your risk appetite. Each one has his own choice. Improving stop loss management. So let's say my moving average system stop loss is at 100 point right now, price is here. So do I wait for crossover? Do I have an aggressive stop loss? That is stop loss management. Okay, so you can use order flow to improve your stop loss management. Then target projections. Not every day is the same day. Some days are range bound days where you need to book. So how do I improve my target projection? Some days are trending days. Can I find out, can I use order flow to find trending days better and have better target projections? Okay, then partial entries and re-exits. So if I have a short trade on, let's say T, I book something at T1. Okay, then has my market condition changed so that I no, I do not do any re-entry, or market condition has not changed and I look for another re-entry and again try to sort of re-entry here and then again book another partial exit here. So those sort of things, so partial entry exits and things like that, to improve your price and outcome of a trade. Okay, so we'll use order flow to improve all these metrics based on a trade decision, assuming the trade decision is already a long and a short that you have decided in the market. Okay, now, what are the few things to look for without making it very complicated in order flow? We'll discuss a couple of things only here, and that is going to be very effective. Make it very simple. Okay, three few things: cumulative delta, delta price change, delta shift. What are these? I'll just quickly explain. Cumulative delta is the total sum of delta for the day. So it just adds the delta for each candle. Every day we start at zero. Okay. So think of this way. Let's say the first candle delta is 10, next candle delta is 5, for third candle delta is say 15, and let's say next candle delta is minus 10. So your cumulative delta at the end of first candle is 10, at the end of next candle is 10 plus 5, 15, at the end of this candle is 15 plus 15, 30, at the end of this candle is 30 minus 10, 20. Okay, so this is per candle delta and this is cumulative delta. So cumulative delta decides whether my overall market has more buyers or sellers in the market or not. Okay, that is cumulative delta for me. Delta price change is what I'm effectively trying to see for, let's say, this 100-point move in Nifty, what is my delta change? Now the next 100-point move in Nifty, what is my delta change? Is my delta change and price change relatively more or less same, or they are not changing in a same manner? Okay, if one is increasing, the other is not increasing, one is decreasing, other is not decreasing. That is delta price change for me. Okay, and the third is delta shift. Delta shift is what? Where we are saying that if delta is significantly changing at a one particular candle. So for example, till this point of the day, I have a delta of 200k, but then I have a minus 20k delta in one candle, which is a 10% or more change in the delta in a single candle. I called it a delta shift candle. When a delta shift candle is happening, we are looking for a momentum to shift in the market on the side of the delta shift generally. Okay. Okay, so we start observing only these three things as we, start to work on improving our trade management using these methods. Okay, you don't have to, start with bothering about observing bid ask and all those things at a footprint level. You can just keep that aside, start following these, and it's easy to observe, easy to manage. I'll show you some examples. That way, you can improve your trade management, improve your outcome. Your existing system is long short, you decide that okay, fine, long short. Now I start observing these three things to decide, can I hold my target longer, can I exit earlier, should I book early, should I not book early, things like that. Okay. Okay, now cumulative delta, simple, I think thumb rule is this. Okay, if let's say your signal is long and your cumulative delta is sort of positive, then it is good for the signal. If your cumulative delta is negative, then it is bad for the signal. Okay, so generally if cumulative delta is positive, signal is long, I'll try to hold my trades longer. If signal is let's say long but cumulative delta is turning negative, I'll try to exit my trades earlier. Okay, similarly on the short side, if my signal is short and if my cumulative delta is sort of positive, then I'll try to hold my trade longer and look for a bigger trade. If my cumulative delta is negative, sorry, if my cumulative delta is positive, then it's bad for the trade. So I look to exit earlier. If my cumulative delta is negative, then it's good for the trade. I look to hold my trade longer and try to make most out of that trade. Okay. Now, as an example, if you see this one, market closed here this day, next day gap down. Let's say we went short in this, in this trade here that day, okay, and then we were trading the short pretty well, and then eventually what happened is cumulative delta started to turn positive. This is cumulative delta chart for you, and this is price chart for you, okay. So cumulative delta started to turn positive, so it was a signal for me that okay, don't have to wait for a larger stop loss, probably book it early. You save some points here, book it early. That is one. Second thing is because cumulative delta has shifted, I'll not now prefer my short signals, I'll prefer my long signals. Now then after that, since cumulative delta was positive, we look for a long buy. So any pullback this time on the long side, we're looking to add long and capture on the long side. Okay, and that is how it is. So we are avoiding short trades, we are looking for long trades once this is happening. That way I'm effectively using my signal plus my cumulative delta figure to improve my trade management and get more out of the markets. Okay, clear on this one. Then the next one that we have is delta and price change. Okay, so what we are trying to see is if delta is changing in sync with the price or not. Okay, in this case what has happened is if you see again, markets I think gap down and then we went short here. Okay, so delta was also pretty good at this point, market was going down, so shorts were going very well, and our initial stop losses were something, let's say above this line, around this line, or around this line, I don't remember, maybe around this line. Okay, and then what happened is I saw that the delta kept shifting lower, but prices were pretty much steady, which meant that prices are finding support. Okay, means delta is not moving effectively with price on the downside, so it means it is pricing, price is finding support. Similarly, if delta is moving fast but price is not moving much on the upside, means price is finding resistance on the upside. Okay, so when that is happening, or when this is happening, it's a warning sign for you that there are hidden players in the market or hidden orders which are protecting the market levels, and it is better to manage your stop losses aggressively if you're on a short trade, or book your profits. Okay, so in this case what we did is we quickly shifted our stop losses way lower, and we are effectively able to effectively get out of the trade much earlier and avoid a hit of this many points in the market. Okay, so that way my risk management technique kicked in. My signal was short, but I was looking for an early exit, and I was not really looking to hold the trade longer once this was I started seeing this. Okay, this helps me to protect my bad trades, my bad signals, and eventually get more out of my good signals again. Okay, the the third thing, as I said, is delta shift. Delta shift, we described a significant change in delta in one candle on a particular direction. In this case, again, we had a short signal going on in the market, so which was good. But then we had a significant delta shift candle here. If you see 10% delta change, minus 500K to minus 450K in the next candle, 10% delta change, good price change also. This signal to me that market direction can change or market mood can change. So it again helped book a partial target here or an early exit here, and not looking for a full reversal and stop loss at this point of the signal. Okay, my initial stop loss, so I could save again this to this much, sorry, this to this to this much in my stop loss management again. So if you're short, if you see a positive delta shift happening like this, you look for a partial exit, early exit. Similarly, if you're long and if you see a significant negative delta shift happening, you look for a partial exit on your long or an early exit. Okay, so these three things, very effective techniques. Don't have to observe bid ask at a detailed level, and still can effectively manage and improve your trade. I'll repeat again, just three things, guys: cumulative delta, delta price change, and delta shift. Start observing this, use it in complement your trading analysis, trading strategy. New to order flow, observing this, easy to observe instead of bid ask. Okay, and you will see a significant improvement in your trading execution and trade management. Okay, guys, have a good day and a good evening.